What's up, everybody? Welcome to the April 20th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into those hot button market issues. So let's get started. Let's start with one here. The market is not the economy. I wrote that very simply because I've been spending a lot of time over the past couple of months talking about economic growth, jobs reports, inflation reports, consumer sentiment, all this stuff that kind of relays how we're doing from an economic perspective. But on this one, I want to take a little step back because a lot of times when you hear me talk, I'm pretty measured about how the economy is actually going right now. And I do think over longer periods of time, the economy and the stock market do tend to correlate. If we're in a good economy, generally the stock market's going to be healthy. If we're in a bad economy, chances are the stock market's not going to be rip-roaring constantly either. So I do think there is correlation, but they're not perfectly correlated. And we're getting a good sense of this right now. Is, from the end of March here until the early part of April through where we are pretty much right now, it's been pretty strong. The stock market, I would say the economy is still kind of, at least the data points we're seeing, is okay to middle ground. It's not a disaster, but it's not raging. But we have reached new all-time highs in the S&P 500 again. And why I mention this is I think it's important to understand that the future outlook and the earnings growth are the bigger components of what the market is going to do, and also the composition, because a lot of people, when they look at the market, look at the S&P 500. Well, again, the top 10 companies are 40% of what the S&P 500's number looks like. So when those numbers are going well and they're growing very fast, they just have an outsized emphasis on what the overall market is going to look like and what it's doing. So again, when I talk about the economy, I think it's important. And I think it's very important to understand where we are from an economic perspective, especially consumer sentiment and how it relates to spending. But I'm much more of, we got to watch what they do and not what they say. And we're getting that differential right now. And I'll talk about that here in a second. Turning to number two, financials were largely reported last week. At least many of the large ones have already reported. And boy, I got to tell you, there is some good signs. If you're looking for financials as a component of economy, because a lot of the commentary, I would say a lot of the positive commentary was that consumer resilience, heard that a lot, heard that kind of across the board, is that the consumer is still spending. Again, going back to what I just said before, watch what the consumer does, not what the consumer says. Even in an area where oil prices have risen dramatically, there's been a resilience of the consumer to continue to spend on things and experiences and that kind of stuff. You're seeing it through financials data, which is a good sign for the overall economy and for us as a whole in the stock market too, because again, our economy kind of runs off the engine is our consumer spending. And our consumer doesn't seem to be, they seem to be saying negative things, but they don't seem to be doing negative things right now. On the business side, kind of the same thing. We haven't heard a lot of capital expenditure reductions. Now, again, more earnings are coming in the future about how companies feel about their own. But if you look at through loan growth, and you look at through financials, nobody is saying that there's a massive retrenchment going on right now, even in the business environment, even as input costs are rising because oil has gone from 60 to 100 bucks. So right now, there's not a lot of red flags. And what I would say from the things that they were cautious on are much more abstract in general, right? So the leaders of these firms, a lot of them were talking about, well, we haven't seen the full impact of, economic trends on, from the oil prices. Sustained oil prices could have a negative material impact. Totally get that. They're risk managers. They should absolutely be talking about the potential negatives that are coming. But in the most of the conversations and most of the, the things that I heard were much more, if this happens, then we could be. There wasn't a lot of concrete evidence that things are changing and getting dramatically more negative as a result of either oil, consumer sentiment, these kinds of things. So the concrete evidence suggests that things are still progressing relatively well. The abstract evidence obviously is going to be a little bit risk managed. Turning to number three, This week we have industrials and healthcare. I think United Healthcare reports this week. GE reports this week. I think Raytheon is reporting this week. We'll know a little bit more about those segments this week coming up. And I think this is where it starts to get important about what the companies themselves are saying. Again, through the financials, I think we have largely a lot of green signs. But these companies do have to report their outlook for the remainder of the year, right? A lot of them give at least, if not quarter ahead, yearly outlook guidance. And a lot of them gave it in January, and they're going to give an update this quarter. So that's what I'll be looking for this week for not as much the healthcare companies, because they kind of operate under a different, they're not as cyclically bound. The industrials certainly are. And the industrials are certainly facing at least a pressure with regard to higher oil prices. Higher oil prices make it more expensive to build, transport, all the stuff they need to do to deliver their goods. They need to be part of that ecosystem that is affected by oil prices. I want to see what they're saying about their end customers and about their own plans to offset that. So that'll be an interesting component as we go through the industrials this week. Healthcare, again, just much more spending trends. It's just a little bit of a different animal, but still you can glean some information off that as well. Lastly, number 4, tax day has now passed. It was, April 15th was the national tax day, the deadline to get taxes in, unless you file an extension. But really, I was interested in learning a little bit more. So I did a little bit of research on refund fund versus refund pay bills, right? I had artificial intelligence look, but I had them cite sources about what people think or what people tell you that they spend money on when they spend their refund checks on, when they get the refund checks. A lot of them say it's for prior consumption. Most of them either said they're going to pay bills, enhance their savings, I'll get to that in a second, or pay for the things they've already done. And then a much smaller subset said we're going to use this for future fun, right? The expenses that, hey, a vacation coming up or buy a car and these kinds of things. It's usually much more what I saw was a focus of getting myself correct, paying down debt, paying down bills, maybe enhancing my savings, and then secondarily do some fun stuff after. So at least what people say they do is around much more, responsible activity, if you will, in paying for things and not saying they're going to blow it all on fun. Now, what I'd be interested is, again, these are survey tracks, right? I'd be interested to see what if they could follow the actual data and see where that money actually flows to. I think paying down debt is absolutely, again, you're paying for prior consumption. I think that's probably the case in a lot of instances. I'm a little more skeptical of the enhanced savings. You do see a little bit of that kind of flow its way through sometimes, not all the time. So I would be interested. I wish there was a dual track. I didn't see one. I tend to go in the fall, and I'm one of those people that file extensions. So I am going to go more in the fall. And I'll be honest with you, I have mostly done either savings or debt pay down during those periods of time as well. But occasionally I've had some fun with it. So I'd be interested in the comments below. If you want to tell us what you're going to do with your refund check, if you got one, I'd be interested to hear it. So that's it for this week. Tune in next week where we'll have our next Hot Button topics. But until then, thank you very much. Take care.